We're going to focus on the record run for stocks and how long this can continue. We'll ask the investment committee that question, how to invest in the face of this runaway rally. Josh Brown, Joe Terranova, Liz Thomas, Jenny Harrington, all joining me here at the New York Stock Exchange. Take you to the markets here, a little bit in the red today, but the Dow hits a new high. The Russell had hit a new high. It has dipped into the red as well. But the story really remains some of these incredible moves that we have seen within the chip space. I want to really zero in on this Micron move, which is meme-ish, to say the least. And if there's one stat that underscores the run that this stock has had, let's make this longer, guys, for me, to show the run that the stock has had. This one might be the most eye-popping, okay? For a stock that's up 220% year to date, Micron reached $1 trillion in market cap in just 48 days after it was first valued at $500 billion, okay? $500 billion to $1 trillion in market cap in 48 days. For context, it took NVIDIA near 500 to hit that same benchmark. I think it's constructive to address the fact, Josh, if you don't own it already, and you're turning on our program, which led with it today and has been talking about it high up in our A block, as we say, every day, can you still own it? If you don't own it now, can you buy it now? How would you answer that?
I would say before you pull the buy trigger, do yourself a favor, have your favorite LLM X-ray your existing holdings, including your ETFs, your 401k mutual funds. There is a very high likelihood that you do already have exposure to Micron, and that taking in an extra position directly into the common stock may not be the smartest thing to do right now. I was talking with Jan Van Eck last week. Van Eck, as many people know, owns the SMH semiconductor ETF. He's got a very good point of view just on the entirety of the space. Micron, differently from many of the other semi-related companies, is basically going through this massive uptick in earnings growth as a result of price increases. We know a couple of things. The first we know is that's rarely sustainable past a couple of years before other people start coming up with solutions. You can't just take price forever. And they've already taken a ton of price because there are only effectively 2 or 3 suppliers to the space. We also know the programs themselves that are requiring all this memory, the LLMs, the data centers, they will all figure out innovative ways to get by utilizing less memory eventually. It doesn't even take that to happen, Scott. All you need to do is hear one person, like a Dario or a Sam, come out and say, actually, our new model is going to be 20% more efficient in our memory use. And this stock could be at 700 in 2 seconds. So I don't love the idea of buying Empire State Building charts. And I want you to check and make sure you don't already own it before you buy something that's just 100x'd right before our eyes.
You know, Joe, I was talking with a well-known investor this morning who is as astounded as everybody else in the move of this stock and was still buying calls.
And I think buying calls is probably the right strategy, because if you don't own the stock today and you're going to buy it today, understand you're buying it for the near-term return. I say that because if you say to yourself, I'm buying it today and I'm going to hold it over the next 18 months or 12 months, then you have to understand you're going to expose yourself to a significant correction at some point. It's inevitable. Why do I say that? Because this right now has the most attention of any other stock in the entire universe that we cover.
That's why we led with this move, because it is incredible to watch.
Let me support it with some evidence, okay? You have currently, on a daily basis, this stock trading somewhere near 60 million shares. That's well above its historical average of 15 million shares. If you look at the options, which expire on a weekly basis, The volume on a daily basis continues to grow. The open interest continues to grow. So you used the word before, memeish. I don't know, Scott. I'll leave that to you. You be the judge of that, whether that's the right word to use. But there's excessive speculation in here for sure. I can tell you the market makers, the high-frequency algorithm models are all participating right now in this name. And what they're trying to do is just capture near-term upside. Longer term, there is really strong fundamentals in place because high bandwidth memory, the capacity for this company, it's sold out for the entirety of 26, and the demand for 27 follows, and it can be characterized as being insatiable.
Memeish doesn't, by the way, insinuate that the stock doesn't deserve.
It's not memeish,
I'm talking in terms of the one-day price action moves.
You're right
alone,
about that. Absolutely.
Alone, like a 20% again yesterday. Mm-hmm. That's like what we saw in the heyday of the memeish activity within the market.
You can't move a $2 trillion stock with chatter on Reddit. You can move a $25 billion stock.
The price action in this thing has made a lot of people sit back and say, man, it's
extreme.
So here's where my head's at on this. I was reading that article the other day about the market maker, that guy Joe Packey at Morgan Stanley, who's trying to figure out how to deal with SpaceX, right? And what he's saying is, I really need to be sure to get that IPO into the right hands, into long-term buy and hold hands. And so I've been thinking about this in relation to Micron. When you see NVIDIA that took years to go to $1 trillion, and you see 48 days on Micron, to me that screams that it is memeish, and the memeish part being, Scott, in that it is not in the right hands. It is not in the long-term, thoughtful buy and hold hands. So then I say to myself, if you were to buy it today, why would you buy calls? And I think you could still make money, but you need to be very clear that at this moment in time, there is not an investment thesis that you can make on Micron, but there is a speculation thesis. And you need to say, look, if I was going to make an investment thesis, I need to have a lot of clarity as to the next 2, 3, 4, 5 years of earnings. There is not enough clarity.
Well, no, you have a backlog. You have a backlog. There's clarity.
For the record, it's John Pacey, not Joe Packey, but nonetheless, please continue.
Sorry. Thank you for correcting me on that.
Pleasure.
In the moment, I get all heated. Anyway, the point is, it's still trading at 10 times next year's earnings, right? Why is that? Because there's the backlog, but there's not enough visibility. If there was enough true visibility, it wouldn't be stuck at 10 times. But I think if you speculate and say, like, hey, where's the momentum taking it? What's going on with this meme trade? Is it going to take it higher? Could there be short-term upside from here? Then you do the calls. Then you can buy it. But it's a speculation. It is not an investment at this point.
Liz, again, price target today, the way that the price targets are moving is incredible in its own right. Barclays today goes to 11.75. They were at 6.75. 6.75 sounded reasonable. That's 2 months ago. But now it's 11.75 there. William Blair goes outperform. They name it the most constructive semi, that they expect sustained price increases in memory, which is going to drive up their revenue and their earnings potential. That is the fundamental backdrop to a T. Memory prices increasing, revenues are going to increase, the earnings expectations continue to go up. Thus, as crazy as the price action would suggest the trading has been, maybe it's all justified.
In semis broadly, perhaps it's justified over a long-term period. I think in a short-term period, the question here and the message that semiconductors are sending and what Micron is sending is that demand is outstripping supply. So prices are continuing to rise. Demand will continue outstripping supply. And I think that's what's going to drive a lot of this. But the question that we're asking ourselves on this desk right now is really more of a technicals question. Is this the right time to enter a certain stock that's been up so much? When you look at the technical side of it, I don't think you're going to find a technician out there telling you that this stock looks good on a chart basis and it looks like a good entry point. So if you're really trying to make that decision from a trading standpoint, probably not a good time to jump on the semis bandwagon or jump on a parabolic chart bandwagon. That being said, I do think the fundamentals support what's going on right now. If we look out 12 months in the future, can CapEx continue at this clip? Yes. Can earnings continue at 20 to 30% growth every single quarter? I'm skeptical of that. So as things start to slow down and get a little bit more rational, the healthiest thing for this market to do would be to spread some of that love into other sectors and other industry groups, which would say that semis have to have a cooling off period first.